Hi, everyone, and welcome to another live trading series. It's been a few weeks since I've done this. Sorry to leave you hanging. It is Friday, January 7th. It's lunchtime. I have a few trades I want to show. I haven't been trading much because I've been busy with work. I haven't put much thought into this, but I've been doing weekly iron condors on Tesla. I wasn't able to show a few past trades that I've did last week that I've done. Last week I sold a $3,000 iron condor on Tesla, and then within 2 days I closed it for $500. So within 2 3 days, so I sold it Friday, closed it Monday. I made $2,500. I'm gonna try to do the same. If I go right to TradingView, I'm gonna show you the strikes I've been choosing. So when I'm doing 7 days to expiration, I feel like anything under 14 days, under 21 days, you're not making I don't rely on the Greeks too much, like delta, theta, gamma. Even though I probably should, there's a lot of gamma when you're under 14 days. But for such short duration trades, I use charting. And here are the strikes I've chosen. 900 is the recent support I found. 1200 is a recent resistance I found. So it did kind of break to 1205 in the pre-market, but 1200 seems to be decent support that I will use for 7 day to expiration. Then let's go right into it. Tesla is down 2% today. I am going to sell 3 for 7 days. So right now it's January 7th. I'll sell a week out. And I will be choosing 1200 and 1300. Where is it? So the reason why I'm going wide, the wider you go on your strikes, the more you get exposed to the Greeks. And also, the further away your max loss is. So someone asked, why do you do 100 when you can do, let's say, 10 wide, and then you just sell 30 of them? Your max loss will be the same, but you're not exposed to the Greeks as much, and it will take longer to reach your profit potential, and it's quicker to reach your max loss potential. I hope that makes sense. There we go. I feel like I always have lighting issues. All right, so let's go 900. I feel like sometimes I don't explain for beginners as much, and I shouldn't assume that everyone has watched all 65 or 66 of these videos. You might be coming in right at the end, so I'll try to do a better job of explaining. But here is my you gotta sell. Here is my setup. We'll try to do the midpoint. I will be using up $28,000 in buying power. My max loss is 100 times 3, so this is 90,000 max loss, but I will manage it before it gets there. I will never let it hit max loss. I will be making around $1,600 on this trade, probably closing it for 75% profit within a few days, or manage it. I'll try to film if I do have to manage it. We'll sell this. Gets filled right away. Nice. I do have another trade I need to manage because it went sideways. If we take a look at this strangle, I sold a 30-day to expiration strangle in AMD. I chose 135 and 170. Even though AMD was at 150 and it's dropped $15, so like 10%, I'm still profitable on the whole trade. So theta is decaying. I probably should have managed this a little earlier because right now it is breached, but I'm kind of in crisis management mode and I will show you how to manage it. I am going to add 30 days to this and not increase my contract size. There's 2 ways to manage. Oh man, there's so many ways to manage. 2 ways that I do. I either add contracts, same expiration, or just add expiration. So I'll show you what this looks like. So I will sell 6, keep it at 6. The good thing about rolling down is that it does use less buying power because I'm going to do 125. I'm doing a skewed strangle. So if you look at my deltas, usually I do 15 or 20, but I like AMD at this low $100 mark. I don't need to go a little lower because I wouldn't mind. I feel like AMD would hit a plateau here. So while you should be using deltas and charting for most of your trades, this is bad. I am doing this one a little bit on feel. I wouldn't mind owning 600 shares of AMD at 25 if that happens. So let's take a look at what happens here. I am going to the Greeks here. So 14, I try to go 15 delta on the call side. That is my risk because I don't like, having to short or being naked. I am doing 31 delta here. People if I posted this like on Reddit, a bunch of the incels there would hate it because they try to do. Everyone says you should do delta neutral, but I am kind of bullish on AMD. I am predicting this as a bottom, but it might happen, it might not, and I should be getting a decent amount here. Let's try to get this filled for 190 times 6. This will be what, $1,200? So $1,100 for another 30 days to expiration. My risk is the 165 side. It is, for me, it is 165 side. It is not the 125 side. Let me sell this. So that would add, what would that be? 45 day to expiration. That is as far out as I'll go. I won't manage or I won't sell anything longer than 45 days to expiration. There's just not much premium in there. What else am I going to do? Looking at the S&P 500 map, oh, it's blank. I've been too deep in the technology side and the semiconductor side because I have NVIDIA as well. I am trying to branch out. I'm trying to sell a bit on Nike, and I'm going to sell on the financial side, which is Visa, just to get more exposure to different sectors. I've been too deep in this top sector over here. Even though there's not much premium in them, if I do the 25 strangle around 45 days, 25 delta. Sorry, I can't talk properly. So I am order filled. I am going, the closest to 25 delta is the 150. And this is slightly more than 1% a month, which is what I aim for. So to try it out, I will be selling closest to 25 delta, one contract. I do have a lot of buying power to deploy, which is why I'm doing this. It is using around $3,900 in buying power. My risk is if it drops, if I do get assigned, I'll have to buy 100 shares at 150, which is around $15,000 that I'd need selling this. And then with Visa, I'm going to do the same thing. February 18th, I'm going to sell one contract at the closest to 25 delta, which is 205. So this is, I think, 1.5% in a month. I will need $20,500. Let's go here. And then I think I need, what is it? I think 25% buying power margin requirement. It varies. I think Tesla is a little higher at 50%. We'll sell this. So I think that's all I'm going to do for now. I'm not sure if there's anything else I want to show. Come Monday or Tuesday next week, I do want to show how to manage in the money puts. So I've sold on NEO and Square. I've sold 3 and 5 puts. They are in the money. I will show how to manage them, but that is for a separate video. If there's anything else I want to show you, not really. SPY is down a little bit. No big deal. Volatility is up. I am interested in Roku. I do like the premium on Roku if we go down to like the 140 strike. So let's take a look. Should I try to do this now? Let me just do it. I was looking at this. If we just show all. So Roku has had a decent downturn. So the premium should be a little higher. So 1 month out, if I sell at the 10 delta, it should be 2.5% return. Let me just try to do this math. 375 divided by 140. 2.5% return. My math isn't good. 2.5% return for the 10 delta. Let me do this. All right. Let me deploy some more buying power. Cool. So my risk is $14,000 if Roku goes to 0. So, and I think this is like 40 days. If Roku drops from 183 to 140, I will have to buy. But ideally, I will manage this. I won't get assigned. My new rule of 2022, don't get assigned on anything. So I will sell this. Sweet. I'm going to leave it here. Thanks for watching. Let me know if you have any questions and tune into the next one.